Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to talk now to Fortuna Mining, and Jorge Ganoza here, the CEO, is here with us to give us an idea about the fourth quarter and also about 2025 of this fantastic gold and silver producer. Jorge, good morning. How are you? Good to see you.
Hello, Jochen, and once again, thank you for the opportunity to speak to you and your audience.
Yeah, thank you very much for your valued time. And I'm a shareholder of the company. I want to disclose that also upfront. And I must say a happy shareholder because the company just released some hours ago, again, record production for 2024 and also gave a very good outlook. So maybe you can give us in a nutshell 2024 record production again. So things go the right way, I would say, right?
We had a record year in terms of gold equivalent production, Jochen. We produced 456,000 ounces of gold
equivalent
in line with the low end of our guidance and exceeding our performance for 2023. When we break down the gold equivalency, because we produce, 85% of our revenue today comes from gold, about 10% from silver, and a small 5% component comes from our byproduct lead and zinc out of our Yoku Mine in Peru. So if I break the components of these 456,000 ounces of equivalent gold we produced, we had record gold production of 370,000 ounces of gold, achieving the midpoint of our guidance. Our silver production declined at 3.7 million ounces as an outcome of the San Jose mine coming to the tail end of its life. So, all in all, it was a good year in spite of the lower silver production. We had record gold numbers, record gold equivalent numbers, and we're very happy for that.
Okay, super. If I look at, let's say, gold production, silver production, would that be something you would say, okay, we emphasize maybe a little bit more on the gold production in the future? Or do you have something, let's say, in your mind or maybe longer term planning where you say, maybe we should also go back to a little bit more silver production because you sold San Jose, right?
Yes. We changed our name just recently, right? From Fortuna Silver Mines to Fortuna Mining. Silver has been certainly part of our heritage. We began as a silver-focused company, but through the years, as we have expanded and grown our business, we have followed the path of most of the silver producers of any meaningful size out there, which is we start becoming more and more of a gold producer, right? And that has been our case. And we believe in the name change we did earlier in 2024 better reflect Fortuna today. Having said that, we are agnostic gold, silver, gold. What we pursue is opportunities in the precious metal, be it gold or be it silver. And when we look at these opportunities, we assess them not strategically, I want to be more in gold or silver, but which is the asset that makes most economic sense, right? And an asset that can perform throughout the precious metals price cycle, right? Evidently, finding those silver assets, it's a bit harder than finding those gold assets, right?
Yes, that's right. How was the development of your cost structure last year? Were you happy with that?
Yes, we have. We haven't provided the final numbers, but we have in our disclosures already indicated that we expect to be within our cost guidance for the year, a bit on the high end, but within the range of our guidance. And we are comfortable that with our cost traveling around the $1,600, 1,600 and change dollar mark for all-in sustaining cost. If we think of what is the average cost of the gold mining industry today, Jochen, it's around $1,500 per ounce. I would like to have Fortuna at or below the industry average, which these are $1,500 today. And I believe we have a strong opportunity to get there over the next 24 months.
Okay, super. I mean, that is also a bit reflected because you bought also over 6.4 million shares back. That is really fantastic, I must say. So that means you are already giving back money to shareholders, and you are reducing your share capital, which is, I think it's a great thing, because you couldn't do that if you're not earning really a lot of money.
Yeah, and we pay a lot of attention to our shareholders, of course, and there's been a generalized theme around return to shareholders. But remember, we have been coming out of a capital-intensive phase in 2023 with the construction and delivery of the Séguéla mine, which was delivered in mid-2023. And then throughout the second half of 2023 and throughout 2024, we've been rebuilding our treasury, right? Paying down debt aggressively.
Yeah.
And it is now that we believe the company is in a strong position to start providing returns to shareholders through the share buyback. And, again, things do take their time to do them properly, and time is in everything of essence. And the fourth quarter was the right time for us to start participating again in the market aggressively. We repurchased 6.4 million shares, about $31 million in the market. And we look forward to continue, providing returns to our shareholders via the share buyback that we have in place.
Okay, super. Then let's talk maybe about Séguéla in the Côte d'Ivoire. I think the mine delivered very nicely, and it looks also like that your cost guidance is really on a fantastic path. And as you told me before, you have already now a 2-year guidance for the mine, right?
Yes. In 2024, we delivered 137,000 ounces of gold. In 2024, we delivered 137,000 ounces of gold at Séguéla. For 2025, we're guiding in the range of 134, 147,000 ounces of gold. But we have been able to capture a lot of opportunities and expanded through optimization, the processing facility, rescheduled the mine plan, capturing some of the opportunities that the good discoveries that we've been making through the last 24 months provide for. So for 2026, we see ourselves guiding now for anything between 160 to 180,000 ounces of gold, but more importantly, at an all-in sustaining cost in the range of $1,260 to $1,390. So that is a meaningful production at a very competitive, low all-in sustaining cost, well below that average of $1,500, which is the industry average for median, you will, for today's gold product.
Okay. And how is working these days in Côte d'Ivoire? Is everything fine?
Cote d'Ivoire is probably the premier mining jurisdiction in the West African region. When we think of West Africa, we hear a lot of difficult, controversial news coming out of more of the inland countries, Mali, Burkina Faso, Niger. The coastal countries like Cote d'Ivoire have a different attitude today towards business, foreign investment. And I would say that Cote d'Ivoire is consolidating itself as the premier mining country in that region.
Mm-hmm. Okay, super. How is it going then? Let's say Séguéla, it looks all really fantastic. You said that already. And how is the Yaramoko mine going in Burkina Faso? Because there was also something which was not so easy, but is now everything clean and clear?
Yeah, Yaramoko has always been a strong performer. Remember that Yaramoko was set to close in 2023. We acquired Roxgold and acquired the West African business back in 2021. Yaramoko was set for closure in 2023. And it is through exploration success that we have been able to expand the life of mine. So we had a strong 2023. We have had a strong 2024 at this one mine. And we're looking now to a strong 2025. If you look at our guidance for Yaramoko in 2025, we're guiding between 107 and 121,000 ounces of gold, also at a very competitive all-in sustaining cost of at around $1,300 per ounce for 2025. So it's been a strong performer. It's a mine that's been running on short life of reserve for the last 3 years. But we continue pushing with the exploration, particularly in the deeper levels of the mine, with extension of or gallery drift that is in the lower portions of Zone 55, and that has been yielding a lot of success to us. So we continue doing that. But we're looking forward to a strong 2025.
That's important. Super. Let's switch shortly to Argentina. And funny enough, I was reading a lot about the country, and Mr. Milay, I think he's doing so far quite a good job. You have also a lot of capital attached here to the mine. So how was that going over 2024? Your investments into, I think you have the leach pad phase 2 expansion, the capitalized stripping, you have heavy equipment replacement, etc. So how is that going, and how do you think that might come out now 2025 and following years for Lindero?
Yeah, Lindero had a strong 2024, and for the year we delivered within our guidance range. We delivered 97,000 ounces of gold. This mine in 2024, as you mentioned, carried a burdenous project, which was the leach pad expansion. And for your audience, the leach pad expansion is it's a project that serves the mine for a decade. It's all in all, in 2024, we invested around $42 million. It's an investment that you do in 1 year, but serves the mine for a decade. This mine with a long life of reserve over a decade. This leach pad expansion allows us to place ore in the leach pad for the next decade, right? So the project is complete. So with that, capital requirements come down. Now, 2025, looking at our outlook, is a year where our strip ratio goes from 1 to 2, or weight movement double. So the benefit of the lower capex is being somewhat taken away by the higher strip ratio, which peaks in 2025 and then comes down again to around 1.5. So yes, capital is coming down, capex is coming down, creeping is going up in 2025, but the net benefit is still positive for cost. We expect to operate at an AISC in the range of 21,650 in 2025 at this one mine, producing around 100,000 ounces of gold. Mm-hmm. So at this mine, we also have important optimization initiatives, and we are capturing already benefits of that amount probably to close to $16 million through multiple initiatives that the team is carrying, from optimizing the mine fleet to improving the size of the drill bit and optimizing cyanide consumption, the reagents we use at the copper SART plant. All of those things are yielding incremental cash flow to us at this one mine in 2025 that we estimate amounts to roughly $16 million, right? Oh, so a lot of good news coming out of the mine. Mm-hmm. We have to go through this hump on the increased strip ratio in 2025, and then it comes down again with lower capex, right? So the mine is producing 100,000 ounces at a competitive $1,650 per ounce.
Yeah, fantastic. So if you would look over the whole portfolio for 2025, are you, let's say, investing in exploration approximately same amount as last year? Will it be more? Will it be a little bit less? Can you just give us a bit of an idea what exploration would look like overall over the portfolio?
Yes, in 2024, our investment in exploration has been $44 million roughly. And what we have in our budget for 2025 is $41 million. So basically the same figure. I am sure we'll end up expanding the $41 million based on results as the year progresses. So I think we're going to be basically in the same range as 2024. It's a sizable budget, $40+ million for a company of our size. Yeah. And our focus is on what we call high value opportunities. So a lot of that money is funding exploration at Séguéla, which continues to provide exciting results. A lot of that money is also funneled toward the Diamba Sud project in Senegal. Yeah. And some money into Argentina, where we're advancing with the exploration of the Arizaro porphyry within our property. It's a gold porphyry system there. And also in Cayoma, we have two, I would say, new development, the Antacoyo and Santa Rosa project, which are not part of the vein complex that the mine operates, but are within our property and are more disseminated gold type opportunities. Still early days, and we're going to be drill testing them in 2025.
Okay, super. Let's come shortly back to the Senegal, to Diamba Sud. You already touched on that. How do you see there the, let's say, major development goals for 2025? Because my understanding was always this might be your next big gold mine.
It is an expectation. It remains an expectation. We acquired Chesser in 2023, and the resource that Chesser had between indicated and inferred resources was about 800,000 ounces of gold. And we treated that resource as an appendix because it was never done by us, right? It was a third-party resource. So we decided to go and do our own drilling, build our own geologic model, and from that start developing our own resource base. So we are in that process. We have drilled a substantial program in 2024. We are looking to expanding into 2025. we have learned a lot through 2024. We're putting those learnings to use in 2025, and we expect to produce our first resource estimate probably in the first quarter. Our original expectation was that we could do that towards the year end. It's looking more now like Q1, basically because we have rebuilt geologic models in support of the resource estimations, right? And through our drilling, as I said, we have learned a lot, and we have a lot of exciting opportunities that we are actively pursuing in and around the resources that Cesar had outlined. So we have a new deposit, and we have learned more about the ones that were already in inventory under Cesar. So all of that is coming together, and I would like to see this coming through or closer or through the 1 million ounce mark to have a development project. And we're working towards that now. We still, I believe, have to get there, and we expect to have a resource published probably in the first.
That would be then already the million?
The guys are working hard. That's the objective.
Okay, right? Super, fantastic. A question more in general, because when I look into the media with Mali and several other, let's say, developments in Africa, is it becoming more difficult to work in Africa? Or would you say, well, no, we are still in good shape because we have good relationships and things are really working, local communities, etc.? Or do you think that a little bit the wind is changing in Africa?
Again, Africa is a big, large continent, right? Even West Africa, we're talking about multiple smaller countries, so it's difficult to generalize, right? We shouldn't. So when we think of West Africa, as I mentioned before, I believe those inland countries like Mali, Burkina Faso, and Niger have certainly over the last 2, 3, 4 years started taking more of a nationalistic approach towards natural resources, changing the rules, increasing taxes, royalty, government participation, being more contentious with some of the foreign companies. It's very visible to all what's happening with Barrick, what happened with Resolute and their CEO in Mali. I believe Mali today is probably the extreme, no? Having said that, we see companies that continue to be able to operate, but it's not the type of business environment that favors further investment, right? Let's be clear with that. But I make that difference between the inland countries and more the coastal nations, where Cote d'Ivoire, Senegal, even Guinea could be. So we, as I said, Cote d'Ivoire today is probably the premier mining region in that area. Burkina Faso, we have to also understand that the government of Burkina Faso contest with a security crisis they are fighting, and the jihadists and those groups, they have a security crisis, a humanitarian crisis, and when they look for money, the only place they can find it is in the mining business, right? So I have to say that in Burkina Faso, in our experience, every time we approach government, they are receptive, right? They are receptive. We have good dialogue, and we try not to, have a contentious issue with an autocratic government, of course, right? Because in Burkina Faso, you have a captain leading the country right now, right?
Okay. Good. So we can say 2024, fantastic year. Everything is really in good shape. 2025 even is in the making, in the planning, and it looks also fantastic. Again, profits, free cash flow. You will buy back shares, of course. So what I'm interested in, what is your personal view on gold and silver?
As we were discussing before we got live, I think the fundamentals, in spite of signs currently in the market that would suggest the Federal Reserve of the United States will not be able to continue cutting rates as aggressively as originally indicated. Gold has not only held its ground, but continued to go up. I'm concerned that we might be seeing bubbles forming in other asset classes. And, everybody will have an opinion on this one. But if you look at the technological complex, the artificial intelligence, the EV, and the cryptocurrencies, if I fear that there could be a bubble, continued inflating by the rhetoric of the new U.S. administration. And in spite of all of that, gold is holding its ground and going up. So I see that as a positive for gold, because it tells me that gold is playing its role as a store of value. If people start to get nervous about what's happening and the uncertainties as we go in with a new U.S. administration that wants to change everything dramatically and do not really, we know the U.S. president is a vociferous man, part of his style of negotiation probably. So that creates nervousness, and I see gold playing its role as a store of value in front of all of this nervousness, right?
Absolutely, yeah. So store of value and safe haven, I would say.
Yeah, safe haven. And again, you try to make the argument to go to other asset classes, and I mean, we know where the cryptocurrencies are right now, and the meme coins, the all of that, I think sensibly you see gold as something you want to increase in your portfolio.
Yeah, definitely. Well, I do that definitely since many, many years, and so far so good, I would say. And the cryptocurrencies, well, this is something of this is a own story, I would say. And we will see how that goes.
Yeah, I am not a market analyst by no means, but the returns that we had that are being obtained in that space of cryptocurrencies, it's second to none. But I think we can have a concern or a fear that those have been going up too much too soon, perhaps.
Yeah, could be. Well, we will see what comes out. We know gold is the real value, and good gold miners as your company are also real value. And you are standing on 4 or 5 solid columns, probably coming more in the future here, not too far future, which is important with Séguéla. And I think you guys are doing the right things. That's why I'm a shareholder. Thank you very much for that, Jorge. I wish you all the best. And I hope that I see you at the latest at PDAC.
Yes. And, anytime we're available to catch up with you and your audience. So thank you very much.
Thank you very much, Jorge. Thank you. Take care. Bye-bye. Thanks. Yeah, ladies and gentlemen, that was Jorge Ganoza, the CEO of Fortuna Mining, a fantastic gold-silver producer. And as you heard, things are really in line. What is also very important, the company purchased for over $30 million shares back. And this is like, to me, the first step to really reward shareholders here. Maybe in the future there might be a dividend. We will see what comes out. But the company is extremely profitable, makes real money, positive cash flows, and real profits, and reduced their debt all substantially over the last 2 years. And with the Ambasud, this is the next big development, I would say. Maybe that takes another 3-4 years, but they are on the right path here. And you really should have a look onto this fantastic company. We have our next price target here for the companies around the 9 to 10 Canadian dollar mark, and could be even more. So thanks for watching us, and bye-bye from Switzerland.